All right, guys, he's over at Chatham Mortgage Partners, and we're looking at the past week, and the big impacts that happened. Big news of the week was Pfizer's announcement, and their vaccine was 90% effective against COVID-19. It also appears that some vaccines could be distributed before year-end, so that's had a huge impact on the volatility this week. And luckily, things have balanced out much better than expected. Number two, markets tend to overshoot. Stocks and bonds tend to overshoot the upside and downside in response to the market-moving news. And this week looks like another example. On Monday, when the Pfizer announcement was made, the Dow Jones almost hit 30,000, and since that time has actually lost several hundred points, and as well off to the best levels of the week. Number three, the vaccine will be a headwind for bonds. Besides Pfizer, there are many more firms close to an effective vaccine. So over time, we should expect more ways to combat the virus and allow our economy to fully open. While the financial markets may have overshot with its initial response to the vaccine, the trend of more progress in economic expansion is bad for bonds and rates. And we saw that during this week. Number four, stocks and rates were not the only things that rose this week. An effective vaccine can't come soon enough. This past week, daily COVID-19 cases and those currently in the hospital hit record levels. This alarming trend has many states paring back their reopening strategies, reinstituting fresh restrictions. Should we see deeper restrictions that cause uncertainty and other economic harm, stocks and rates may experience volatility and decline from the current level. And last but not least, guys, more help is on the way. Despite the high uncertainty, politics, the election, and our president-elect, a new stimulus package is coming to help many in need. The size and scope of the stimulus is not clear, but will likely consider the current rise in cases as well as the effects of widely distributed vaccines. More stimulus is not necessarily for bonds and rates because it lifts inflation expectation and adds more treasury supply to the bond market and helps continue economic expansion. All in all, guys, bottom line is rates are just above all-time lows. With the vaccine and more stimulus on the way, it may be difficult to see rates improve much, if at all. If you or someone might want to talk about lowering your payment or looking for options, see what's going to be the best situation for you currently right now, feel free to reach out to us. We'll provide that personalized mortgage analysis. And as always, thank you so much.